The RBA meeting today, I'm joined live by senior economist at the Australia Institute, Matt Grudnoff. Matt, thanks for joining us. The consensus really, it felt like on the RBA decision that they would lift rates by 0.25%. But in the last week or so, it seemed that 50 basis point call by experts has been growing louder. Why do you think that is? Why the change in the lead up to today's decision?
Well, the difference is that the consumer price index, our main measure of inflation, those figures came out and they're above now 7% for the year. Now, to be clear, the government predicted that it would go to continue to climb like this. The budget papers say it'll go to 7.75% by the end of the year before then falling off. So I think the big change is the data, the CPI has come out, and that's what's changed people's thinking.
Inflation is tipped to reach 7.75% by the end of the year. So is there any evidence so far that these rate hikes are starting to slow inflation?
No, there isn't. And part of that is because the type of inflation we're seeing at the moment is on the supply side. So it's to do with international movements of goods. It's to do with high oil price, gas price, fertilizer prices. It's to do with things like flooding affecting fruit and veg prices. And higher interest rates doesn't affect that. If Australia puts its interest rates up, that doesn't affect the world price of oil. That's to do with the war in Ukraine. That's to do with the world economy emerging from the pandemic. And so the increasing interest rates, I wouldn't expect them to have a huge impact on inflation.
Yeah, you speak about the world economy there. Australia is on a slightly less aggressive path of rate rises compared with other countries like the UK and the US. So why is Australia being more cautious compared with other Western economies at this point?
Well, we are being more cautious than places like the UK and the US. That said, it's highly likely now that both the UK and the US will go into recession. So perhaps they've gone too hard and too fast. But the other reason is interest rates in Australia are rising faster than they ever have before. So this RBA has increased them at an extremely rapid rate. For an average mortgage now, it's almost $900 a month more for households. And that's going to have a real impact. The other thing is this impact actually takes quite a number of months to flow through. So the full impact of the interest rate increases hasn't yet arrived.
All right, Matt Grudnoff from the Australia Institute, thanks for joining us. It's good to get your insights, and we're going to